Well, good morning, everyone. This is James from Dividend Stock Talk, where we talk about dividend stocks and investing for weekly and monthly cash flow. Why do we do it this way? Because I got bills that come due on a weekly basis. I'm sure you got them too. So why not take your money and invest it how you want? You want to invest for monthly cash flow or monthly returns on your investments, or do you want to do it for weekly returns on your investments? Today just so happens to be Friday, April 27th. It is 10 a.m. The market has been open for an hour now. So let's see what's going on and see what we can do today to maybe increase our return on our investments. Now, as you'll see, I have 3 accounts that I'm looking at. This one here is strictly dividend investing. Let's take a quick look at that one. As you can see, we have 2 positions. This is the dividend investing with options. We have 2 positions here. This is the one that we're aiming for weekly cash flow with this account. Now we got, like I said, 2 positions: Goodyear Tire and Intel. Let's quickly take a look at Goodyear. Take a view at our trades on Goodyear first. Okay, so as you see, we bought Goodyear on the 21st. Got 5,000 shares. We bought it at 27. Now, we did collect a premium on selling options on it last week to sell, but the price didn't go over 27 last Friday, so we ended up carrying the 5,000 shares over till this week. And again, we're going to end up sending, it doesn't look like it's going to get called out today, because it doesn't look like it's going to go over 27 today. Let's take a quick look at Goodyear. Goodyear started out the year at 35, traded in a range between 32 and 35 for about 3 or 4 months, dropped down to the 30 to 32 area, and that traded sideways for a good, looks like 7 months or so. It never went higher than 36.72 for the year so far, but that was back in, when was that? That was back April of last year. Okay, so that was about a year ago. It actually hit the high for the 12-month period. When you talk about the stock market, they don't go January to December. It's 12 months from today. So today, which is the 27th of April, I go a year back, which is the 27th of April of 2017. So last year, at this time, it made high of the year at 36.76, and basically gone sideways between 30 and 35 for basically the whole year, about 9 months. And then right around the end of January, she slowly took a lack of better words, dump. So where she's at now, today at 25.72. Now last week we did sell the option. We did sell the option for the 27 call. Now we thought, right here at the beginning of the week, she was going sideways for 4 days. She thought she'd stay right there because she has the dividend coming up next, I believe it's next Monday or next Tuesday. Let's quickly take a look and see when the dividend for Goodyear is actually coming up. This is the week of the 27th. Oh, but I think it's the week. Up there is right there, Goodyear Tire. Got a 14-cent dividend coming up on the 30th, which is next Monday. So yeah, most likely this stock is going to go down for another day or so, but I'm not really worried too much about that. It is Goodyear Tire, and let's see what Goodyear does for the year, seasonality wise. Here's where we are. All right, so Goodyear is, well, let's go back and slowly explain this to you so you understand what it is. All right, the red line represents 10 years worth of data. What I mean by that, it's January to December for 2017, 2016, 2015, 2014. 10 years worth of data all compiled on top of one another and then averaged out. It's a lot of mathematical equations and algorithms and all that kind of neat fun stuff that we don't really have to understand, other than it's an idea of what and how the stock moves on a yearly basis based on the calendar. Okay, so here we are right now. The blue line represents this year. She went up a little bit at the end of January, then she slowly came down. But what does she normally do? She normally goes down January to February, then she goes up, and then she gets like a trading range from like the whole year, from February all the way towards, I would say, September. And then she slowly goes up a little bit. And it's just a slow uptrend towards the year. So it's not, perfectly sideways. She starts out low at the beginning of the year and it just builds momentum at the end of the year. So we're in a good position with Goodyear. I mean, they have weekly options, so it allows me to collect premiums on a weekly basis with this 5,000 shares. Now, last week, we did collect 2,500. Wait a minute, it was more than 2,500. Anyway, here's our what do you call it? Our option premium right here. We made $3,600 from the option that we sold at the beginning of the week. Okay, so yeah, we bought the stock. We have 5,000 shares of it. We bought it at a discount at 27 because the market closed last week at or the week before last at 27 something. But we were able to buy it at 27, which was great. Yeah, we did lose a little bit of money on it, but let's quickly go to account statement to give you an idea where we are with Goodyear Tire. Goodyear's right here. Okay, so Goodyear Tire, right now we're at a loss for the year at 3,900. Okay, but we're actually at a loss of 2,500 for since we opened it. But year to date, we're just below 4,000. But we have that nice $1,800 movement that we're going to collect today. All sounds a little confusing, but at the end of the day, where are we? Okay. At the end of today, even though the stock is down from where we bought it, okay, so remember, we're up here. We bought it up here at the $27 area. And yeah, it's at $25.77. Yeah, it's $2.50 below what we bought it. However, let's click on this again. Okay, we bought it at 27, and yeah, it's at 25.77. So we're down $6,000 on the actual stock ownership. Okay, but if we never, ever, ever sell it below 27, that number is moot. It doesn't really mean anything because, as you can see, let's go back. Okay, Goodyear, the high at 36 and the low just recently of 25. Goodyear's been around for over 100 years. They're not going anywhere. Granted, I don't know if they're a dividend king or a dividend aristocrat. I really don't know where they stand in that manner. I'm pretty sure they're not a dividend king because I haven't seen them on the list before. However, they're over 100 years old. Everybody knows who Goodyear is. They're not going anywhere. I'm sticking with the 27 because I really don't think it's going to go, it will go back, above 27 eventually. So what I'm going to continue on doing is every week I'm going to continue to sell the 27 option for someone to buy it back from me for the exact same price I bought for it. And what am I going to do there? I'm going to continue bringing in premiums. This week we brought in so far $3,600 as a premium. Now we'll know exactly by the end of today what that number is going to be because the price fluctuates during the day. So we get a $3,600 credit to our account this week just for owning Goodyear. Now let's see what next week's Goodyear looks like. We'll put GT in here again. So next week we'll probably end up doing this all over again. Here we go, and the 27 at this moment in time, the 27 is worthless. We could sell the 26 for $15, 15 cents a share. Let's see how much that is really quick. I'm not going to do it. I'm just trying to guess of what it's going to be. 50 contracts. Now I'm not actually selling it. I'm just seeing what the price is. Okay, the most we can make next week is $750. Is that really going to be worth our effort? I don't know. So at this moment, we're not going to do that because I don't like that number. We'll take a better look at that later on today. It's going to delete that because I don't want to sell that one. All right, so anyway, Goodyear in my humble opinion, is a good company and they're not going anywhere. I haven't, this is my own fault, you may want to do something different. I haven't really looked at the news to find out what's actually going on in the marketplace and why it went from 28 down to 25 over the last couple of weeks. I don't know. I don't really care, to be totally honest with you. You know, I'm a lazy trader. I want to do the strategy that works for me and gives me weekly and monthly cash flow, okay? My average that I'm looking for on a weekly basis is 1%. Okay, so on a $100,000 account, I'm only looking to make $1,000. And so far, this week on Goodyear Tire, as you can see, we made 36. So we're well above what we wanted to do for Goodyear. Even though the stock price is bringing our year-to-date profit loss down quite a bit, it's still not changing the fact that we made over $3,600 on this option play for just this week. All right, that all being said, let's look at Intel. All right, Intel, INTC, let's put that in there, INTC. Okay, Intel started out the year at 36.64, went a couple of months before it found the low of the year at 35. From there, it went sideways again for another 2 or 3 months. That takes us up to 5 or 6 months in the 33 to 37 area. From there, she just shot up nicely to a trading range of 45, traded there for a couple of months, and continued on up to where we are today at 53.88. I have no idea why she gapped up today from a close of 53 to an opening of 55. Don't know. Honestly, don't care. And I know that that doesn't sound quite right. You guys should be a little bit more coherent, or a little bit more on the ball, so to speak, with your trades. But for me, I'm just doing this for cash flow. I want to get in, I want to get out, I want to make my trades, and I want to make sure everything's on my side. Intel's a very good company. They've been around for a while. They're not going anywhere. 50 is a good price to have Intel at. So what we ended up doing, we ended up buying the 50 and selling the 50.50 debit spread. Okay, what we wanted to do is we wanted to collect the premium between the 50 and the 50-50. So that's funny, 50-50-50. Anyway, so what happens is as long as the stock stays above $50.50 by the close of business today, we will make profit on that. And where do we stand with Intel for the year? Let's, INTC, where is INTC? Let's go alphabetically so we can find it easier that way. INTC. Okay, so far for the year to date, we're up $1,900 for INTC. Okay, I can deal with that nicely. Thank you very much. All right, so Intel, we're doing 1,900 up. Yeah, I want to show you next week how do we get rid of some of these losses. So we'll cover that next week. But we do have more wins than losses, and we'll be working over the year to eliminate all these losses, or try our best to eliminate them as best we can. All right, so all that being said, that is this account. Again, INTC we don't have to do anything about because they're way above $50.50, which is way down here. So as long as it stays above here, we're going to make that profit, and I believe we're like a 30 or 40% profit for this week. Thank you very much. All right, anyway, Goodyear, we're not going to do anything about that, even though Goodyear is below what we want it to be at. Goodyear, quickly, yeah, even though it's a little bit below where we want it. You know, we want it to be back up above the 27, but it is what it is. So we're going to collect a premium on that, and we're going to look at it again next week, because Monday they're paying out their dividend. They're actually the EX date and the date of record. Let's quickly look at what the date of record is again for Goodyear. All right, Goodyear. Here we are, right here. They announced a dividend back in on the 10th of April. The EX date is the 30th, and the date of record is the 1st. So, and then they make the payments on, what was that, June? Yeah, May, June. June 1st. Actually get that 14 cents credited to our account. All right, all that being said, yeah, we can look to hopefully get out of that and see what Goodyear does compared to that dividend. All right. That's it for this account. Let's go take a look at another one. And this. Let's get rid of that one. All right. This one is our dividends only, where we're just collecting the dividend and just collecting the checks on this one. So we do have a little bit of money to trade with this one. So let's see who is available this week. All right. Today's the 27th, so next week would be the 30th. Okay, we can't really do any trades for the 30th, so we want 10 days from that, which would be the 7th. And I'm going to do companies with weekly options only because it gives me more of an kind of breaks down who's who. Huh, that can't be right. Well, that can't be right. May. All right, out of all these, someone has to have a weekly. There we go. Yeah, we already did that. So we're not doing the week of the 1st, because that's next week. That doesn't give us enough time to make any trades unless we want to do for Friday. So let's take a look at who we have on Friday, because the options expire on that. That's the last day to trade. So that is that's kind of like the double whammy. You know, you have your options expiring and you have what do you call it? The EX date on the Friday the 4th. So let's take a look. Now we don't want to look at the 3rd. We don't want to look at the 30th. We don't want to look at the Budweiser. Hey, but no. Do you know why? Because the EX date comes and then the stock goes down after the EX date. So the EX date is the last day you can buy the stock before it's the last day the stock trades before the dividend's paid out. So let's take a quick look at these guys and see what we got going on here. Let's get rid of that. Let's right click on there, more info on C, go back to the quick chart. All right, the quick chart shows you get the low of the year at 59. She jumps up about 9 months later, the high of the year at 80, drops back down to the 69 area. Great, gotta love it. Let's see what seasonality looks like for Citibank or Citicorp or whoever they are. Seasonality looks pretty good. Starts out, drops at the end of January, beginning of February. Then from there, it's just like a steady upward trend for the whole year. She looks like a little bit of a dip for the first week. See that? Here we are now on the 27th. And next week, this is a week right here between this line and this line. And that looks like a little dip. So I don't want to do that because I don't want it to go on the downside. ETE. Now, this is not guaranteed that this is what it's going to do. I'm just saying, this is what it has done in the past. Now, usually, with companies that don't come up with something new every day or every week, there's another one. Goes down coming into the EX date. I don't want to do that one on INTC. INTC. We already got INTC on our other accounts. So is it going to continue? It's basically flat. Do I want flat? No, I really don't want flat. MET, MetLife, MET. MET kind of goes sideways and it jumps up. That would be a good play to get into because, yeah, we can collect the dividend and we got this run-up coming up. So MetLife is a good one to look at. SYF. SYF. Who is that? Really? That is a big old no because that is definitely on the way down. TXN, was that Texas Instruments? Yeah, Texas Instruments. There we go. All right, Texas Instruments looks basically like it's sideways coming into the summer months. Sideways I can deal with, but she's got a little bit of a dip. All right, so let's look at TXN and Intel. INTC. INTC. Okay. Let's look at the standard chart because we want to see what it's doing now, not what it looks like it's going to be doing, and we go from there. Okay, that's a big jump. And do I really want to jump into that, considering they're having the EX date next week? It's a possibility. Let's see what it looks like. And we want to do the spread, which is the vertical, the 54.29, 54. 53 could be good. 52. 52 looks good. Let's go a little bit more. Go one lower. Okay, so 53. 52 and a half. 52 and a half is way down here. 52 and a half. All right, if we go for a 25% return for the week, 50 contracts at 40. The going rate is 42 at the moment, so I probably won't get filled on this one. But as you can see, at 50 contracts, it's a $2,000 position. The most I can make on this is $500. $500 from 2,000, that's a 25% return for 1 week. They got the dividend coming up next Friday. So this is an interesting play. So let's give this one a try. You know what? I should not have done that because this is my dividend. This is my dividend one. This is not for those kind of plays. All right. That was a mistake. Huh. Profit and loss for the day. I could sell that right now for a profit. What did I get that at? 34? Okay. That was a mistake. So what I'm trying to do is I'm trying to get rid of it now, but let's back to where we were. All right. I ended up buying it at 34, and it's at 39 right now. It's an $1,800 profit relatively quickly. Or 250, I don't know. Whatever it fills in. That was mistaken. I don't know if I should be able to cancel. I can't cancel it. All right, so anyway, let's get back to what we were looking at. We were looking at Intel or Texas Instruments. All right, so Texas Instruments, let's... They're 102, so let's buy some Texas Instruments. Because they're kind of like in a good position right now. Let's go back and see what we're looking at. All right, so Texas Instruments started out the year at 80, went sideways for about 5 or 6 months, and then it took about 2 or 3 months for it to jump up to the 100, 115 trading range. It made a high of the year at 120. Now she's at 102. It's kind of a nice spot to be in, especially when you get the dividend coming up end of next week. So what I'm going to do is I'm going to buy this and hopefully sell it for what we're looking at. Let's trade INTC. Now we got $2,200, 23. So that's double that. It's 46,000 at 102, right? 36,000, no, 46,000 at 102. All right, 46,000 divide 102. That's going to equal 450 shares. All right, so let's get 450 shares of that. Let's move this over. All right. We want 450 shares of Intel. GXN. Get myself in trouble there. $450 shares, 102, limit, blah, 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 for the day, blah, 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 blah. Oops, I did the wrong one. Buy custom. There we go, that's what I wanted. There we go. $450 shares. 450 shares. All right. So what we're going to do is we're going to buy 450 shares of Texas at the market, and then as soon as that fills, we're going to automatically sell by a trigger trade at 2.5% over what we bought it for, and that should cost us 45. Let's see if we got it. All right. So we ended up buying it at 4. Let's go back. Monitor. Okay. So what we just did. Isn't that funny? We bought INTC at 34 and we sold it at 37. How much did we just make on INTC? $150 for 15-20 minutes. 15 minutes. That's not bad. All right. Anyway, a main position that we wanted to get into was Texas. It was TXN. Was Texas Instruments. 450 shares at 101.77. We're looking for a target price at 104.32. So if it reaches where we want, that's going to give us a nice little profit. Now, what am I looking for? Let me get off of the phone. Let me get out of here, and well, let me just get to this in a second. We bought this at 450. We're going to sell it when it hits 104. That's our target. If you have any questions, no questions. So I am out of here for now. We'll catch you a little bit later on today, just as the market's getting ready to close, and see what we're actually